Hey, John Sonmez from SimpleProgrammer.com. So in this video, I'm not going to be talking about software development specifically. I'm going to be talking about investment, specifically real estate investment. I've done a couple of videos on this, but I got a question asking about real estate investment. So I thought it'd be good to do another video and answer this question. Since this is a pretty good question, a pretty core, I'd say foundational question for doing some real estate investment. So this question comes from Per, and Per says, "Hi John, I recently purchased everything you made: the soft skills book, how to market yourself as a software developer, and the 10 steps to learning plus the workbook." So, well, thank you for that, Per. I really appreciate that. That you've definitely got my attention. If you really want me to answer your email and do a YouTube video, starting it off with that is definitely a good way to make sure that I'm definitely going to respond to you. I respond to just about everyone, but definitely appreciate that. So anyway, he says awesome material, especially your soft skills book, is at a whole new level in content packed. Cool. I wanted to ask you about advice towards real estate investment. I mean, how would you start out if you had to do the same thing today? And what would you say are the best resources on real estate investment, books, etc.? Thanks. So, here's the thing. Um, well, okay. So, just to give some background here for everyone, um, I have a chapter in my book. I think it's chapter 55 in soft skills, where I talk about how I basically retired at 33, how I built up my real estate investment, how I used the money that I was making from businesses in order to basically get to the point where I have passive income coming in from there, and I can, sort of live off of that income. And but obviously, I talk about a lot of pitfalls that I went through in that and in learning experiences, and my perspective has changed right today. So it's a good question to ask. What would I do today? How would I start out today if I were doing the same thing? So what I would do today is I'd probably be a little bit more risk adverse. So I had been pretty leveraged when I started out. I was buying properties where they had negative cash flows, where the property that I was buying, like if you paid the principal on it, when you paid the mortgage payment, you were essentially making money, but out of my pocket every month, it was costing me money. And then I was, getting in some cases a home equity line of credit in order to buy the next property, and so on. It allowed me to expand really fast, but it put me in a crunch situation, and it was sort of risky. I didn't it was dependent on my income at my job, and it kind of left me trapped for quite some time until real estate did well and I could get out of there. I could have left my job earlier and been sort of retired earlier had I done things differently. So that's what I would do differently today. Is the number one thing I would do if I was going to do real estate investment is knock my expenses down to as low as possible. I talk about this a lot, but this is something really important to consider, which is how can you get your own personal expenses, like the monthly fixed cost, as low as possible. So can you live in a very small place? Can you live in like a one bedroom apartment? If you can, what's the smallest place and smallest rent that you could essentially pay, right? Just to make it so that your passive income will be won't need to be too high in order for you to be technically self-sustaining. And also, just so you can redirect as much of that income as possible. Now, I did this to some degree, right? I don't want to say that I didn't do this. I was pretty frugal, but I would be extremely frugal, trying to cut costs as much as possible during this first phase. Then what I would do is I would save up enough money, and in the past I would have put 10% down on a property, but now I would say to put 20% down to still do a 30-year fixed loan and look for properties where you can get a good deal on it, where you're going to have a very high cash flow on that. So you want to obviously calculate everything out, but you want to make sure that you're putting at least a few $100s a month in your pocket when you buy the property. So, I'd say save up about 20% down, figure out if buy single family homes or duplexes or whatnot, where you're going to get the best leverage. Probably it's going to be in duplexes, I would say. It might be, you might find it in fourplexes. In single families, it's usually hard to find that right cash flow to get the higher cash flow. It depends on the market, but essentially you want to be shop very carefully on your first couple of choices and make sure that you're putting money in your pocket. So 20% down, I would say 30-year fixed loan, pick up the property, and it might take you some time. But if your expenses are very low, then you're going to be able to, and you're getting money from the property. Then when you buy that first property, it's going to have an immediate return for you. That's going to make it easier for you to buy the next property. So your expenses, if you can imagine, your expenses are low, right? So you're already able to save a large amount of money. So you get to that 20% down, you buy this property, now you're getting an extra $200 to $300 a month cash flow in your pocket. So now it takes you less time to buy the next property. And I would keep on doing that. It's a little bit of a slower and steadier thing, but than what I did, but it's going to ensure that you're always in positive cash flow, and that's always increasing, right? Which is going to be good because it's going to put you in a better situation, and you can just keep on, going up the ladder, and pretty soon you'll be able to, you want to keep on buying properties as soon as you can. And it's just like if you've played Monopoly, and then as you acquire more properties, you get the higher rents. The same thing will happen. So that's what I would do. I would just take that very, very basic strategy and do that. I wouldn't try to do anything really fancy here because the markets have been weird. You can get stuck, and if as long as you're getting positive cash flow, the key is to buy the properties that are good properties. To go through and run your numbers to make sure that you're getting something that is going to put money in your pocket every month, that you're accounting for. This is the other thing, is account for maintenance and vacancy rate, right? This is something that I didn't do early on. So I thought this should break even, but it ended up being negative on the property. So I would definitely account for that, account for all the expenses, make sure you've calculated it, take the time to look into the market to find the really good deals. Definitely get a property management company in place, and interview a bunch of them, right? Don't just take the first one, and have this set up ahead of time so that you can so that you've got a property management company that's going to take care of the property for you, that there's not going to be any problems, and you can just put your effort into buying the properties. So that's really what I would do. I know it's not a very fancy strategy, but it doesn't have to be. It just needs to be simple, and it needs to be something that you can execute on repeatedly. The key here in the strategy is going to be picking the right properties where you're getting a good deal, where you're getting good positive cash flow on those properties. Obviously, there's a little bit more detail to that, as far as like figuring out how to buy the properties and stuff. So I would recommend, I've talked about this before, but I would still recommend this as a resource, because it's really hard to find good books and information on real estate investment, because a lot of it is, you know what I mean? It's like trying to get rich quick type of things, which is, it's not going to happen, right? This is a long haul type of thing. So, you're going to get rich over 20 years or 30 years, not over 2 years or 3 years or 5 years even. So The Millionaire Real Estate Investor is the book that I'd recommend. I'll put a link in the bottom of this video, but it's the one that I recommend in my soft skills book. It's still the only one that I really recommend, because it really has a good strategy in there, and it makes sense, and it kind of sort of puts that out. A secondary book, it doesn't really have the greatest real estate advice, but just in getting that mindset. And a lot of people don't like this book, but it's a good basic book, Rich Dad Poor Dad. I think that it doesn't have practical advice in it, but it kind of gets you the right mindset that you need to do real estate investment or any kind of investment. But yeah, unfortunately, I don't have really great books to recommend. A lot of what I learned from real estate, I did read a lot of books, but a lot of them were very hokey. But a lot of it just came from experience, and just realizing the basic strategy that you should do. I'll mention one other strategy that a buddy of mine is doing that's working out pretty well for him. It's a little bit, I'd say it's even more conservative than the strategy I'm recommending here. It's somewhat similar, but what he's doing is he's buying property, and he'll buy his one property, and what he'll do is he'll go and he'll fix up the property after he buys it. He'll put 20% down on it, right? He fixes it up to get the rents up higher. So he puts a little bit of investment into there. And then after he's done that and he's gotten the rents up a little bit higher, so he's got a better cash flow on it, he'll go ahead and he'll start paying off that property, putting as much money as possible, all the money that's making into the property till he pays it completely off. And then when he's got that paid off, he uses the money that is now generating being paid off to save up for the bigger class of property. So let's say he bought a property for $100,000, then he would now keep on pouring all his money into that one until that totally paid off. It takes a little bit of while to get this going, and then he'll take the money that he's making from that plus whatever he was saving, and now he'll buy like a $200,000 property and put 20% down, and then he'll take the money from that first property and the money that the new property is making, and he'll use that to pay off the second property, so that thing gets paid off. Then he can, buy a $400,000 property, and he might actually do sell the first property to leapfrog up to the bigger class of property. And he's been doing that. It's a little bit slow going, but I mean, you can imagine what's going to happen in his case, right? When he gets up to, a couple $1 million property that gets paid off, he's going to be in pretty good shape. Now, again, 15, 20-year strategy, maybe 30-year strategy to get there, but it's almost a guaranteed ticket to success. The same thing would happen with the basic strategy I'm telling you. I mean, this is just a variation of it. If you constantly are putting 20% down and buying properties, you can imagine you can keep buying bigger ones. The only difference here is whether or not you choose to pay them off, or if you continue to let them to cash flow and then buy the bigger ones. There's sort of this knob between leverage and cash flow, right? The higher your leverage is, the more that appreciation can cause that leverage to you make money off of the bank's money. The higher the cash flow is, the less that is, but the more money in your pocket and the less risk overall. So you kind of have to decide where you want to sit between the leverage and cash flow. I've been at different points at different times. Now I'm definitely into the cash flow part, right? I don't want to go leverage. I don't need to risk everything because cash flow is good at this point. But you got to kind of think about it for yourself. I'd recommend kind of setting the dial to the middle. That's why I say put 20% down. Make sure that you're cash flowing and you should be safe. Do a 30-year fixed loan. But hopefully that advice helps you out. Sorry, I can't recommend any more good books. I'll go back to my library and see what I can find. I haven't been reading real estate books recently, just because I've got a strategy that's working now, and a lot of this stuff, like I said, I figured out myself with spreadsheets and just from experience of doing this now. But definitely make sure, a couple rules I would say to summarize this. Cash flow, right? So make sure that your property cash flows and do the calculations, and get a good property management company and vet out like 4 or 5 of them to make sure that you get a good one, because those are going to be the 2 biggest things that are going to determine whether or not you're successful in real estate investment, or whether you have a lot of headaches. And just expect a learning curve. There's going to be stuff, there's going to be trouble. You're going to have to learn to be zen and deal with problems. It's not a passive investment totally, right? You're still going to be somewhat active in it, and just be prepared for that. But it's a smart move. It's something that will eventually, you will become wealthy from doing this if you continue to do this, regardless of the market and circumstances, as long as you do a conservative, smart play where you're looking 10, 15, 20 years, 30 years down the road. Well, all right, that's all I got to say about that. This is going a little bit long. If you have a question for me, email me at john@simpleprogrammer.com. Even if it's a real estate question, I'll try to answer it here, or even a fitness question if you want. But yeah, if you find this video helpful, if you think it could help someone else, share it, and definitely subscribe to the channel. Take care.